Welcome to our inaugural podcast, and our first guest on this podcast is Allan Shaw, CFO, special advisor, and board member. Allan and I have known each other for over a year now, working together on a number of things, most recently with Portage and their projects. So, and I thought I'd start out our podcast since we're kind of coming up to the end of the year, looking at some of the performance so far. And I was looking at in particular just the S&P 500 and how its industries in the healthcare space were doing. And actually, one thing I was kind of interested in or stood out to me is on the market cap side that smaller had done better. I think all of the healthcare indices are up only in single digits, but the small cap did better than the mid cap, and the mid cap did better than the large cap, at least to date. So, what do you think of that? And did it feel like that, do you think? Or did you think, did you think something different like I did, like large cap had done better?
It's an interesting point, and thanks for having me on. From my perspective, I think I would start off with this: underperformance usually leads to future overperformance. And I would say those classes of stocks have really underperformed over the last couple of years, particularly in an environment where there was risk off, low liquidity in those stocks. They were not feeling as much love. And I think, with, let's call it, the thaw in the market backdrop, where there's been an increasing outlook of lower interest rates, I think you were starting to see a reallocation to the more riskier asset classes. And I think that's probably what we've been observing recently. The pendulum, rarely stops in the middle. So, what we're seeing is exaggerated performances on both the downside and perhaps on the upside.
Yeah. Yeah, I hope so. I mean, I guess, the XBI is another index that we like to look at, you and me both. And if you recall, late last year, I think at the very end of October, it shot up pretty dramatically, almost 50% over a two and a half month period. I think all the way up until the JP Morgan conference in early January, it went up, and then it kind of fluctuated around 100 for a while. Any thoughts on kind of how that goes, or how that was trending? I mean, I know that's kind of heavily weighted, or market cap weighted towards some of the larger names, but
that was a question that a lot of us had. And while there seemed to be activity during the fourth quarter of last year, I couldn't come across with many of the investors that were supposedly pushing this market rally. And it really, one of my conclusions was that it represented a little bit of a short cover, given the fact that people were shorting stocks that time. And once it looked like there was a positive move, and I think some of the M&A that we saw in the fourth quarter contributed to some of that as well. And it caused some covering. I think the euphoria that we saw going into the year really didn't continue that way. We've been flat to down for most of the year, mostly flat. I think the election has kind of given us a down leg for the moment. But I think that my guess is that the narrative on interest rates really didn't play out as people were thinking. And I think that was the other part of the rally that we saw. There was M&A, and then there was also the Fed had come out suggesting that there were going to be a series of rate cuts in 2024. And that pesky...
We never really saw all the ones we expected, did we?
Yeah, I think so. And we had these pesky details of inflation being a little bit higher than people were hoping for. And I think that slowed things down. And as a consequence, the IPO market this year really wasn't what people had hoped for probably the fourth year in a row. So it caused some things to back up a little bit.
Yeah. Well, I mean, you brought up the election, and every 4 years, I think probably when there's only a few months left of the election, everyone's kind of waiting to see what happens before they take a move. So that would probably explain some of the hesitancy to kind of take a move, especially in a sector like healthcare, where it's so dominated by, what the government does with spending on, Medicare, Medicaid, and funding new, new drugs and FDA regulation and things like that. So actually, that's probably another interesting area where we can look at, and looking back at the XBI, I think a couple of weeks ago when some of the, announcements were made for people who were going to run some of these healthcare agencies, most notably RFK, the index went down pretty sharply. It's recovered some. But any thoughts on some of those picks? We've had several picks so far that have come out there. RFK is probably the best known one. And then there's also the CMS pick. I think that was Dr. Oz. And then there was recently this weekend there might be another pick, a surgeon actually who's going to be running the FDA. Any thoughts about any of those guys and kind of what they might bring to the table?
It certainly covers this. Those picks really cover the spectrum in terms of different phenotypes that are taking the helm.
Yes, they do.
And what I would say is that when you're talking about the election, it's some people have a bit of a knee-jerk reaction to this, and I understand it. It certainly has engendered significant emotions on both sides of the aisle, irrespective of where one sits. And certainly, we all have our apprehensions of the unknown, right? And that's why the market has reacted to the way it has. It doesn't like unknown. It doesn't like the lack of clarity. So, they basically sell first and ask questions later.
Yeah.
And I think, in terms of the prospect or the election overhang, it's suffice to say there's going to be changes. What's unclear, are they going to be good changes or bad changes?
Mm-hmm.
And I think in the absence of good information, there's always a plethora of bad information, or let's say people's imaginations run wild. And what I find sobering in all of this is, while I think we have a healthcare system that's the envy of a lot of the world, when you actually look at it qualitatively and quantitatively, you can reach different conclusions on this. And what am I saying? Well, the healthcare industry is a $4 trillion annual industry here in the United States. There's a lot of money being spent. And for that, we have the highest cost per capita in the Western world. But with that said, we also have the lowest life expectancy in the Western world. So in other words, we're actually paying more for less. And that's a problem. And what's also, I think, important to call out here is that biopharmaceuticals only represent about 10% of that $4 trillion a year. So, I would say that, maybe we need a new publicist, but too much attention is being focused on the drugs, and people really need to be looking at the healthcare system, because we clearly can't be the problem. I think there's good arguments for why we're the answer in many cases, but putting those minor details aside, there's a huge amount of waste in our system, and taking an objective, freestanding approach to that, I think has merit. It should be done rationally. You need to be sensitive to the collateral consequences. It could be akin to pulling that loose string on a sweater, and that doesn't end.
The whole thing falls apart. Well, you can rebuild the sweater, right? Maybe and knit it a little bit better than it had been previously.
No, exactly. And there needs to be accountability in our system too, the healthcare system. You need to, if you think about it, who would buy a car if there wasn't a warranty? But there's no warranties on anything we do in healthcare or backstops. If you wanted to take money out of the bank and it took you weeks and they lost your banking records as part of that, you wouldn't be in business for very long.
Or if you didn't know how much it cost before you bought it. That's amazing.
Exactly. I mean, so there's, those are the low-hanging fruits. And there's a lot to be said. I thought the Affordable Care Act, and perhaps Trump will tinker with it and change it from Obamacare to Trump Care. But, I think ultimately at the end of the day, you know, uh, Obama had it right that you needed to be looking at the system savings and looking at this from a systems perspective. We have a very antiquated approach to administering healthcare insurance. It follows people's employment. And, if you look at the actuarial numbers behind that, that means that people generally stay at their jobs 3 to 5 years. So the insurance companies are basically underwriting acute risk.
Right, right. They don't take a long-term perspective on it because they don't need to.
No, and therefore you kick the can on all the chronic diseases.
Yeah, yeah,
There's really the way we're organized, there's no emphasis on patient outcomes, cures, or system savings. It's all about each payer worrying about their savings as opposed to, well, if we do this now, we'll save the system, $1 million. And there's no alignment on that.
yeah, yeah, definitely. Well, you mentioned IPOs earlier, and I was actually looking into that, and I had the feeling that IPOs had really been bad this year, worse than last year, but apparently they're up. They're up so far. I think I counted using one of my resources about 23 IPOs this year, and I think it was can't remember the billions of dollars, but I did note that oncology was again, the dominant area there in the biotech IPOs, and I think 9 of the 23 were in that space, and then there were actually about 10 or 12 more that were outside the U.S., mostly in Asia, which I didn't include in that number, but. Yeah, I mean, I'm surprised. And another observation that I had on the IPOs is that if you recall during COVID, there were a lot of preclinical companies coming to market, and I think a lot of the companies that are now IPing in 2024, they had later phase one or phase two assets with some sort of efficacy data that was included as part of that, and the highest amount raised, I think there were maybe 3 companies in the $300 million range, but there was nothing over $300 million raised. So those are just a few of my observations. I wonder if you have any others or comments on kind of what I observed.
No, yeah, I think we did see a relatively more happier IPO market. I would be afraid to call it robust, but
Yeah. Yeah, definitely not pre-COVID levels, where we had,
no, that
40,
probably
50.
wasn't really good for the system either. I think we've been dealing with the hangover of that parade or
Mhm.
that party of the boy
Yeah.
bands that we had during that go-go period. I would say that what you saw in this last year was more mature companies. So the development programs were later stage, and I think that reflect a little bit of the delay in coming out. That these were companies that were financed in 21, 22 with crossover type of rounds, but they couldn't get out for almost 2 to 3 years. So they actually de-risked those programs and moved them further along. Um, and they also resulted in them being larger IPOs too. You were doing almost, instead of $100 million IPO, they were almost $200 million IPOs. So they were bigger deals. And by doing that, you're having basically a little bit later stage, which is a little lower risk, or more de-risked is probably a better way of putting it. And by having larger deals, you're also putting more liquidity in the aftermarket of those issuances, which
Mhm.
should help the success, which we've seen, particularly the ones that were done towards the latter half of this year. They've held up. Most of them have maintained or stayed above issue for the most part. The election appointments that caused some of them to break issue before. Until then, they were doing very well. Um, and then there was an earlier one this year, Megatomi, I believe, which was a preclinical, and that one has really underperformed the markets. And
Mhm.
I think it was
Mhm.
really a reminder to everybody that you can't be coming out with preclinical deals right
Yeah.
now. And there's been some questions about the thinking behind that issuance. at the end. I would say going into the new year, I think people are looking at, maybe six a quarter, 24 to 26 for the year.
Hmm.
Um, is the cadence that I'm hearing, that there's more people are discerning. So therefore the bar is higher to get out. I don't think it's any different than what we've seen in recent years, that you have to kind of bring your own beer to the party. You need to kind of make sure you've got your book subscribed to, at least, 75% of it. Um, and with much of the people that you've done crossover work. And if you do that, you can get out. But, I think, again, it's a focus on your cap tables, the fact that you're doing crossovers. I think, and because of the numbers that I've said and the fact that the markets have been backed up for the last 3 years, a lot of companies who have such aspirations may find it a little frustrating as well. I heard some talking heads predict, and I would agree with it, that given that dynamic, that I would expect there to be an elevation in private company M&A, because more
Hmm.
of them aren't going to be able to get out. People aren't going to
Hmm.
really want to continue funding them. And so there'll be a strategic clearance associated with those. I think on the oncology side, did you call that? You know, uh, I think targeted therapies are playing well.
Okay.
Radio pharma in oncology is certainly as
Yeah.
hot as they get. I think
Yeah.
ADCs are hot. So I think if you're doing things with targeted therapies, that's going to resonate a lot more in the oncology space. It's still a big area, but there's definitely a correction going on in terms of how much exposure people had to it. I know I was previously involved with an IO company, oncology, and there was a period of time where that was the hottest thing going. And I can tell you that over the last couple of years, IO has become a four-letter word. People just don't want to go near it.
Yeah.
I think inflammation and immunology, I&I, is an area that there's incredible levels of interest. I think as a modality, RNI technology, RNA therapeutics are becoming increasingly popular, and you're seeing the emergence of RNA editing and other modalities emerging that offer great promise. So those seem to be. I'd also call out that the market seems to be, and I think this is consistent with the paradigm that we outlined, is there seems to be much more interested in what I would call lower developmental risk with
Hmm.
larger market opportunities, and cardiometabolic, as a therapeutic area has really become a very hot and focused area, led by obesity, and there's breakthroughs down on
Yeah.
hypertension.
Yeah. Yeah. Obesity is obviously one of those big areas. Novo is obviously the big player there. And I was actually just reading an article this morning about Novo and kind of switching our focus to M&A over here. And obviously that's the exit for many of the development biotech companies is M&A. And they, and my thought was that M&A would pick up pretty substantially this year, and it did a little bit earlier in the year. I'm not sure kind of where we are right now relative to last year. But the interesting thing from Novo was that they said they're going to focus on smaller size deals below 5 billion, right? And I think, probably some of that desire to move smaller is a lot of the bigger acquisitions that took place. Maybe Pfizer kind of comes to mind, making some really big acquisitions that didn't quite turn out the way they had hoped and didn't, generate the kind of returns that they had hoped. And I think there was one at the end of 2023. It was in the CNS space, Cerevel. They had a schizophrenia drug that it turned out that's not going to be moving forward. So, I mean, these multi-billion-dollar investments that end up not working. I mean, why not take a little bit more risk? Go a little bit earlier, spend a little bit less money, and have a more diverse portfolio and see about that. I mean, that's kind of my thought. What do you think about M&A, going forward? I mean, we've had, and maybe also if you are thinking of any deals this year that particularly stood out in the M&A space.
I do think M&A will pick up. I think, the DTC, Lena Carr, really put a kibosh on it.
Yeah.
I mean, the Amgen Horizon deal was delayed forever and ever and ever, based on that. And I think with the new administration, that rate limiting factor will be pulled back. So I do think you're going to see more of it. I think the bolt-ons make a lot of sense. There's certainly less risk um, associated with them, and I think for companies like Novo Nordisk, where you've got the lead, you've got a leading franchise.
Yeah, they got a lot of money flowing in, so they can put it to good use somewhere else.
You can certainly, I think about things that you can evolve into. I think there's better mouse traps. How do you deal with the muscle wasting associated with obesity?
Mm-hmm.
Does that tie you into muscle disease? Does that tie
Mm-hmm.
you into aging? I think muscle wasting is a big part of aging. Obviously, people don't want to they don't take it seriously. It's kind of like nutraceuticals, but I do think, you know, there are things associated with longevity or preserving. Maybe you won't call it that under that header, but I do think muscle disease will be addressed as part of the aging process. I saw data that suggests that if you're in bed for a week and you're in your 60s, you lose an incredible amount of muscle.
Mm-hmm.
And even if you're
Yeah.
active and you take care of yourself, we're all vulnerable and susceptible to the flu. It's bad enough feeling sick when you're tied up in bed. To think now that you're losing your muscle while you're in the bed,
Yeah.
that's
Yeah.
scary. At least for
Yeah.
me, it is. I want to be able to keep. I want to keep muscle. I don't want to lose it.
Yeah, that's an interesting thought on that side as well. Well, Alan, I think we've talked about a number of good topics. We're going to keep it short today, but I appreciate the commentary on these areas. Obviously, we're going to keep an eye on where things are going and the appointments. To run many of the governmental agencies. That'll be interesting to see how that all pans out, and then IPOs. Sounds like we've kind of got things back to maybe where they should be. IPOing companies that are probably in the right stage of development. And then on the M&A side, I think that I agree with you in terms of that being freed up a bit. So we might see more next year, just to take advantage of an easier regulatory environment there. So seems a little bit brighter than it has been recently. So that's good.
Yeah, I would tend to agree that the market backdrop is better, putting geopolitical risk aside. That is a huge wild card. And it'll be seen. I don't think there's going to be major revelations coming out of the IRA. I think there's an opportunity here now to perhaps tweak some of the things that
Mhm.
people found offensive, such as uh, the exclusivity period for small molecules, or perhaps the for rare diseases where you can only get one indication approved. So I think there are opportunities to fix that. And he may change it from IRA to Trump Inflation Reduction Act, but I do think in principle it'll be there. I don't think it'll be accelerated as much. Um, in terms of further expansion, but I think drug pricing has become a populist discussion. So I think it'll be an area that people will pay lip service to, but I think it'll be done perhaps a little bit differently than than
Mhm.
than it was, and maybe be done off the auspices of addressing the healthcare system as we touched on. I think the Biosecure Act, while it looks like there's been an extension of time, so it's not going to cause the operational constipation that people anticipated it might cause. I do anticipate that the anti-Chinese rhetoric that'll be coming from the administration will not make it any easier in terms of cross-border
Mhm.
cooperation. So
Yeah.
that's one that I think the industry is going to have to focus on lobbying and managing, because we are a global society in many ways. And, this is about humanity. I mean, I understand managing supply chains and trying to avoid some of those risks. But, if you look at what's coming out of China right now, some amazing technologies coming out. and you're seeing it in a number of different areas. So, you build a wall, it goes both ways.
Yeah, yeah, the can get stifled if you don't have that cross-pollination, so to speak.
Exactly. So, we have to understand, is this a case of cutting off our nose to spite our face? Or is this really a good thing?
Yeah. Well, great. Well, thanks, Alan. I appreciate your thoughts and commentary on what's going on in
Yeah.
our inaugural podcast. And again, we have Allan Shaw, CFO and board member and all around excellent executive joining us here today on the Zacks podcast.
Thanks, John. It was a real pleasure to kick things off with you, and I look forward to having the occasion to doing this again. Uh,
Great. Me too. Me too.